Okay, so which screen do you guys can see? Do you see the chart or numbers?
I see the chart.
Okay. All right. So Chris, now that you're seeing the chart, is it correct or incorrect? In terms of drawing the trend lines.
Well, there are a lot of extra trend lines in there. Some's already passed.
Okay, great. All right, so Jenny, open up your platform, and you're going to correct it automatically with the aid of myself, Chris, and we got Russell on the line as well. Okay, so let me know, Jenny, when you're ready to, that you already open up your chart. I believe this is the pound against the Japanese yen.
Yes, I have.
Okay, I'll pass the presentation to you. Okay, so how are you going to clean it up there, Jenny?
Huh?
How are you going to clean it up?
You mean clean everything?
No, not everything. Like which one's necessary and which one isn't necessary.
I don't actually. I'm not actually sure how to draw if it's correct or not.
Okay.
So when we connect the trend line, we connect the highest high to the next high, right? Is that right?
Yeah, that's correct. So, all right, right click based on that trend line.
Right click.
Mm-hmm. Right click it for me, please. Click change. Okay, where it says line 1 on the name, type in PUT for now, so primary uptrend.
PU? Huh? Is it?
Mm-hmm.
What
then click, before you click apply, tick show label.
PUT, what's that? Huh?
Yep, and then click OK. Right, means the primary, I'm sorry.
I see, primary.
Should be a downtrend, PUD.
Oh,
PDT.
Okay.
Correct. Should be a primary downtrend.
Then?
Okay. So how can you define now your secondary downtrend that is valid right at this point in time?
I don't know. It said connect to the B to C.
Okay, so which one's B to C now?
This is B. And C is C the next high?
Okay, good. C. There we go. So that being said, now that the price broke out, where do you think the price is going to go to this time?
Let's say go to the maybe
so approximately around 200 and close to 300 pips, somewhere sometime in the long run. Okay, within that empty space. Good.
So the third line is that B to DUI.
Right. So a secondary downtrend.
B to
Nope.
C?
It's kind of no C to D. The question
is. So not from B.
No.
So C to.
That one, is that one valid?
Yes, why not?
Okay,
Why do you
so,
say invalid?
all right, so Chris and Russell, I'll start with Chris. Why, can you explain to Jenny why?
Oh, I see. The bar is not valid. Okay.
No, what happened is you already have some higher, some peaks that that is beyond your line. So, for example, the next peak, if you draw a line from let's see, where you started, yeah, right there. Yeah, if you draw a line from there, what you want to look for is, are there any other peaks that you can that will skip this one? So if you move it to the next one, to the next peak, see how the peak that you were looking at is below the line already. So anything that's below the line, you don't have to worry about it.
But this one, if I draw to here,
right, but it's already below the line, so it's not valid anymore.
Below the line.
Below the line that you're drawing.
It was valid at one point, Jenny, but because price broke through that, it's no longer valid. So earlier in time, that where you're drawing it, it was valid, but it's no longer valid. If that makes sense, I don't know if that helps.
I still don't want it. I thought it's because this bar is not the bullish bar. No?
No.
So that's because you say the line is no longer.
No, it's a peak, which is right. But what happens is it's a peak. So what the trend line try to do is to try to tell you where the price might be, but what that peak is so old now because there are other peaks that are better at predicting the trend that you don't want to use that trend. You don't want to use that line anymore. You want to move on to another line.
Are we looking for the next high? The next highest, right?
Well, you want to look for the next peak that isn't superseded by other peaks. So even that one that you're looking at right now, if you look at, you see another peak to the right, right? Yeah, that one. That's where you want to draw it. Because like I said, all the peaks that are below the line that you are drawing are old.
I see. Oh, but then that means we are looking for the lower high. It's not the next high.
Correct. Yeah.
You look for
find the next valid peak.
Oh, not depending on the price, the highest. Who is the highest?
Well, it's not dependent on the next peak, but rather, when you're drawing it, you want to find the next one. But part of it is because you started from way back, right? So, if you had this picture now and going forward a few days, then you just kind of keep moving your line as new peaks develop.
Okay, so just move to the next peak. But then what's the like a third trend line or the fourth trend line? I just want to know
so
how we
the third one. Right, so you got your primary, your secondary, and tertiary. This is the tertiary line.
So, but when I search for the second one, I search for the next highest value peak. But for the third one, you search for the most recent valid peak, not depending on the price. You don't search for the highest, maybe the highest possible.
Well, I think what you want to do is to find the ones that's visible to you. So
the most recent, recent valid.
Right.
But how, when you have the main trend line, how do you find the second peak?
Not sure I understand what that.
So when I have PDT, how do you find the second one? You don't.
Well, Jenny, you're looking at stuff that's trying to be corrected here. If you were to erase those lines and start over again, you would start from the highest peak, and you would go to the next highest peak, and that would be your primary trend line. We're trying to explain it to you after the fact. So if you were to erase those trend lines right now, it might make more sense to you, because you're trying to, the peak the trend lines work until they're violated, until they're broken. So in time, those trend lines that you were drawing were correct until they're violated by price action in present time. Does that make sense? Does that make sense to you?
Yeah, but that I just confused with the third.
No, but Jenny, there is no yeah, but. It's the fact of the line. There is a line, and you draw it from the peak to the next peak. If that price is violated, then it's no longer a valid trend line.
Actually, I think there are kind of two rules that I kind of tend to think about these in two rules. One is, when you draw the downtrend, like for example, where when you're trying to establish the primary trend line, you go to the highest peak, then you find the next peak that you could see, right? So, for example, where the second peak was, you couldn't really draw a line underneath the second one, because the first one, you have your number one, which is your highest peak. You got number two, the second peak, and since that's the one that you see next, then you draw the line through that, right? And then you follow the same process. The third one is the one that you see next, right? Now, when you're on the third one, then you have a choice of peaks to see, right? Because from there you can, there's nothing that blocks you from seeing the fourth one, the fifth one, and the sixth one. Now the second rule comes in, which is you want to pick the one that is, you want to eliminate the ones that are below the line. If you draw a line through any one of those, and if you notice there's another peak that you could connect to that is above what you're drawing, then you want to go to that one. Does that make sense to you?
So you are talking about the primary trend line, or?
No, this is drawing your successive trend line. So, when you draw the primary trend line, it's from the highest peak to the next peak.
Oh, so the first one is right, but you are talking about the second.
Well, the second one and the third one, because they all kind of follow the same similar process.
So the second one, when you have B, the second one, how do you pick the second one? The one just the next high, or just the next valley?
Sorry, maybe a better way to think about it, if you visualize, you're standing, you go hiking, right? And if you're at the peak and then you look out, right? Sometimes you could see the entire valley, but sometimes you could only see, some piece of real estate, and then there's a valley below that, right? So this primary trend one happens to be the second case, right? Where you're standing there, you see some flat area, there's a valley underneath of it, but you can't see that valley. So you're connecting your peak to the end of that flat area, right, which is the second point. Once you get to the second point, now you can see the entire valley, right? But you don't need all the ones that are deep inside. You want the one that is the furthest out, that because that will tell you where the price is going.
So the second one you pick also the next high, but the third one you pick the most recent value.
Right. Exactly, because you from the second one to the third one, you still can't see any of the three peaks that you highlighted below. Right? If you draw a line from the second one to the third one, right, which is where you have this dotted line, right? All the ones that you kind of identify below are, you don't have a line of sight through that. So that's why the second line is valid, the secondary line. Now, when you try to draw the third one, now you could see the entire valley, and that's the choice that you have to make between all these three peaks, right? Which one is the most valid one, or which one is the most useful one?
Okay, so is that the trend line always like the second to third? The third would be the most recent valid? Is that the rule to make the line?
Yeah, what we have right now is the most valid.
Right. And how about the fourth? Do we usually draw the fourth trend line?
Well, there's no more peaks, right? Once you connect. So what happened is you go from peak to peak, right?
Right. If there's a peak, there are other peaks, then what's
so
are we going to start from the C, A, B, C, D to E, or from the?
No, but you don't have any more peak once you go from once you drew this tertiary line, right? You don't have any more. You don't have any more peaks to go.
Right, right.
Yeah.
But I say if we have peaks, then we are starting from.
Well, yeah. If there are some more peaks before you get to the final point, then you need to see if there's any valid points to connect them.
Still look for the most recent value one?
Yeah, you follow the same process.
The second one you look for the highest, the next highest, right? After B, the C you look for the next high.
Well, you always look for the next valid.
Then why don't we just draw the B to the end? The B.
All right.
Oh.
So you can't nicely do that, Jenny, because firstly, let's define highs and lows. What are highs and lows? Why do you think you are doing the peaks and troughs for the past, I don't know, how many days? Probably you also done peaks and troughs with Jason or with Samantha, right? Because I've seen you sending out an email about peaks and troughs. So firstly, what are peaks and troughs? Why are they important? So look at the highs. Why are the highs important?
Because
why is important? Okay, I believe Jenny muted herself because of the noise in the background.
The dogs bark too much, so I don't know why the peaks are important. First, I think there's a supply or it's hard. I don't know.
Okay. They're important is because they are the highest price points of where institutions are resisting a certain price. So if there's no demand and someone is willing, so just think about you making an offer. It's too expensive. So if there are 3 sellers and you're the only buyer, and you're making an offer to go through here at this high, these three sellers will compete. Who's going to accept your offer? Because there's only one buyer. But if there's now 7 buyers and there are only 3 sellers, what do you think is going to happen to the price? Will it go up or down?
Up.
Absolutely. So there's nothing there dictating at this point in time because it's too expensive. So that high is a very important valid price point, because later on, this one right here, see, notice how no one was willing even to go beyond that because it's too expensive. Instead, they pushed the price down. So sellers came in, probably 3, and all of a sudden you have 10. All of a sudden you have 20 sellers, but there's no demand. So they have to keep on competing until someone on this bottom has to support that price and for demand to come back in order to go to this price point. Likewise, within that high, no one's still willing to go within that previous high. Why? Because it's too expensive. They believe that it's not worth the price. Right? And then that's why all peaks are important. Very, very important. So, and see how, in terms of information that's being given to you from a price, from a very bottom price, like in terms of looking at the macros, going through supply, not even supply and demand, whether if it's a bearish bar, bullish bar, and now going through now just looking at your peaks and troughs, notice how there's already a lot of confusion. So giving you a lot of, like, only 3 pieces of information. But everything has got to do with price, because you have 4 variables. You have a high price, you have a low price, you have an open price, you have a closing price. But these 2 are very, very important in terms of analysis, because this is what dictates an uptrend or basically a downtrend. And it takes 3 points to define a peak. It takes 2 points to define a trend. But within these 3 points to define a peak or a trough will dictate the overall trend of the whole bigger picture. So, that being said, we also need to define what technical analysis is. What is technical analysis? If you can type it in your chat box for me, I would greatly appreciate it. Okay, so what is technical analysis? Okay. Caitlin says, Caitlin's method, the technical forecast of future price movement based on past and current price movement. James says, technically analyze the markets, objective facts regarding a price or price movement. So the correct one is simply Caitlin's and Samantha's, where technical analysis is the study of future price movement, meaning future price movement, simply we're forecasting, is a study of future price movement, forecasting future price movement using present and past price movement. So the keyword actually that we always need to remember is forecasting price movement. Is the study of price, forecasting future price movement. Oops. Using present and current price movement. So if the keyword is forecasting future price movement, then we are now simply creating a probability of where price is going to go to in the future. That is it. Nothing else that we could basically do. We don't use technical analysis to look at present. There's no way. It's too late. See, it is a big problem of basically novice traders is that they use trading systems or patterns that's only based now. So hence simply things like bullish engulfing, bearish engulfing, double tops, double bottoms, evening star, morning stars, rising 3, falling 3, without fully understanding how to read price and analyzing everything using what you currently learn or know so far. So that's a big problem. So to analyze, to create a probability has a lot of factors. But the pieces of information you do have at this point in time is ample enough for you to actually make money, to be honest. It's very simple. And at the same time, once added information is being added, keep on adding, then it can be more complex. Okay, so if I'm going to add, if basically we're saying that it's a forecasting future price movement, so if I'm going to find the highest peak next to, this is the pound Japanese yen, this one I can't add it anymore. Why? Because this one has already been broken. There's no way. So if I'm on top of the mountain, I would be able to see this. I will be able to see this, I will be able to see this, I will be able to see this, but I can't see over here. There is none because this is blocking it. So if I'm going to use like a laser to put in, to measure, just imagine yourself being an engineer. I believe they're called civil engineers, right? And notice about, they have this equipment, like this scope, like a tripod, and then it's a laser guided thing just to measure the distance of where there should be putting, I don't know, where they're going to build certain things, like on the road or whatnot. Same thing. So they kind of put it over here. They will put it now from point A all the way now here to point B. At one point, this was point B, point C, but this one got violated. This becomes now point B. Okay. So this one will be moved to the peak on this end. So if you now move, if you're hiking all the way down, you come back up again, you're on top of the next cliff. You will be able to see this. You won't be able to see that. You won't be able to see that. You won't be able to see that. Okay. So while I'm going along, Jenny, are you following me right at this point in time?
Yes.
Okay. So if you use the same equipment, you'll be measuring from here to here. You can't measure over here because it doesn't exist. Like in terms of you can't see it because this one is blocking that. So now if you move again to the next cliff or to the next peak, then you will be able to see this, you will be able to see that, you will be able to see that. And your lines that you drew are actually all correct, to be honest. That's correct. This is correct. This is correct. They are all correct at one point. This is correct at one point until price broke out and violated it. See, so notice how the high almost touched the broken line. These are almost like predetermined. Like it's almost they already know what the high price is going to be. And the reason being is that if someone's being objective, institutions are being objective, and part of their calculation is always saying, well, the highs is basically around approximately 17793. Imagine if they have algorithm-based type of high-frequency trading, everything is already calculated. Probably they already calculated that as part of their algorithm in terms of the highs and the lows, because highs and lows are an important element when they're doing some form of calculations. So the price will only go beyond it to the next one if price has been broken. So did the price break it? Yes. So you will find the next highs at one point again, creating a new high. So this one is no longer valid. Notice about the high is almost touching it. They need to break that again in order to create a price to go to the next or to the secondary. Okay. Breaking out, touching level supply, keeping going. Then you have another peak. So it's getting closer and closer to go to that side. So it's an if and then statement. Okay, let's also look in terms of your highs. 1, double check. 2. Price slightly broke it, but look at the closing price, just close above it. So it's now currently being wedged between two price points. Breaking out. Then it needs to find, did it broke through that low, 75506, 75688, 688,506. So that low is still higher compared to that. Breaking out, now you have a new lower low, so everything here is no longer valid. No longer valid. So that will now be erased because it's not valid anymore because you have now a new lower low. So everything here is still basically a downtrend whether we like it or not. So you have a primary, tertiary, and a secondary, tertiary downtrend. So the price will approximately reach around this level within that distance. Bingo. Lower to the high. Did I make it up? No. Did you make it up? No. All of a sudden now this only have basically has two options. One to break out on the tertiary trend to touch the secondary, or it's going to fail once again to retest basically this low to create a higher low. You have a breakout. Okay, so even though this trend line is not valid, but it will also be valid at one point because it becomes every trend line will be used as almost like a resistance or support, as a form of a ceiling or also as a floor. Okay, so since you have another peak, that one is no longer valid. It will go through there again. Okay, so very powerful, the price breaking out. So it's slowly creeping into the secondary downtrend line. Clear breakout of the secondary downtrend line. So if you're in this level and you're trading the pound against the yen, so if you go back to basics, is this a buy, sell, or a hold? Type it in the chat box for me, please. Okay, so everyone says basically buy, right? Easy. So it's a buy signal with a clear breakout. Now you have two facts already there, that the odds and probability to go through over the year to make at least 60 odd something pips is highly probable. So to go beyond that, the probability will decrease unless you have a lot of demand that needs to break, because overall you still basically have a downtrend whether you like it or not. Because of that peak. This peak on the other hand has been broken. So here's the beauty now about technical analysis, that if you look at it very closely and you are very meticulous in the way how you look at charts, and this is now the art of technical analysis. Notice you have a low. It formed a trough, two troughs, you have a peak. You have a peak, you have a trough. Everything is a trough, but here. Especially this one and that one. And that high broke out within that high. You have an automatic uptrend. Automatic. Then that means that if this is dictating already a change of trend as a form of the trend competing against that, then the probability to create a new higher high is more than likely to happen. And the only option really for you is to actually buy. Because you already have actually three clues. One, you have a very bullish candle based on a basic foundation of technical analysis is telling you to buy. There's more demand than supply. Two, the highs broke out the previous high. Three, breaking out a powerful trend line within a level of supply. To break a level of supply and the trend line, that's like a huge energy block that it needs to be broken, or else price will go through. If this one doesn't break, bam, that will continue all the way down. Didn't want to. Instead, they push it all to the upside. And someone was willing to go beyond this high. So the next bear is now to break that high. And the next bear is around this area in order for it to clearly break. Because you have a lot of energy, people resisting this price point. So if you're going to say to yourself, well, can I at least make 50 pips out of 60? What will be my probability of winning? You have a high probability, almost guaranteed, that you will make money, to be honest. Okay. So in actual fact, this is where you're at this point in time. Last night, as I was going through looking at this, and then the report came in, and hence when the report came in based on the pound, that's at the pound when it broke through new heights. Right? Because you need news in order to create demand. When there's demand, then this is the only way you will create some form of momentum, or the continuation of the momentum of this, especially to break a trend line in an area of supply. So that automatically means now that tertiary has been broken, secondary, clearly secondary has been broken, nothing dictating a new high. Yes, you have a higher high, you have a higher low based on two candles, but you don't have a new peak right at this point in time. So the odds and probability that price is going to reach all the way down here or up there is highly, highly probable. So this technique alone is a very powerful technique, but you just have to fully, just basically understand basically the purpose of it. Right? So like peaks and troughs are very important, highs and lows are very, very important. So yesterday, so I created some form of surveys because I want to see how members basically operate on the way how they think, from the basic element all the way to the advanced. Notice there's only actually 4 people responding to it. 3 of them basically entered. Actually 4. 4 of them basically entered and 4 of them basically made money. About the rest, I don't know. It's a very easy one, easy trades, you know, with the Aussie dollar and the pound against the US. I didn't even bother looking at the pound yen or actually making a survey of the pound yen. Right? But it was an easy making money. It's almost like, sorry, I ask, like, you know, if there's $100 basically on the floor, what are you going to do with it? You're going to pick it up or you're going to ignore it? That's what the market did. It's giving you opportunities and it's there for you basically for the taking. The market will always give you clues and breadcrumbs, but it's up to you to find what those breadcrumbs are. But you can find those clues, and this is what makes trading so easy, that to make money from trading becomes so easy. So it's like I said, it's a big ATM machine. They will give you breadcrumbs, they will give you the, you know, dollar signs everywhere. It's just simply up to you to basically take it. Okay, very important. Any questions?
So the trend line already broken. Are you going to move or erase the old second trend line or third trend line?
This one is definitely gone. It's finished. This one, because this is new, this is where now you're analyzing, okay, it broke the secondary downtrend. You have this empty space that it has to cover now within this level. But overall, though, what is the trend? The trend is still basically a downtrend, whether you like it or not. Over here, you have a transition of change of trend to go to the upside to basically buy to only a certain point to a certain degree. So, let me erase. Look at here. You have price, you have time. If this is X, this is Y, Z is the distance between X and Y. Distance, or Z, which equates to distance, is very important. So if the trend, the overall trend, is a downtrend, and this is what's basically doing. So from here to there is an uptrend. From here to here is a downtrend. So if you're a long-term trend follower, from December to where you're at, you're still short. But if you are a swing trader, medium, intermediate swing trader, then you're going long, you're going short, you're long. And then when price approaches around this level, what do you think I'll be doing? Do you think I'll be buying? Hell no.
Close.
I'll be selling to the downside again, right? So from here to there, I'm long. So it all depends on what you're seeing, what you're looking for. So trends are very important. Can we go against a trend? Of course you can. Can you make money in any type of market? Yes, you can. Any time frame, you'll definitely make money. It's just a matter of which one are you looking on the overall bigger picture of things, to the intermediate, to the smaller picture of things. So another example is the pound against the dollar. I mean, yeah, it's downtrend, but over here, it's easy. You just have to buy it. Why? Because there's more room, the distance that it has to cover. So if you're looking at the primary downtrend, this is the primary downtrend. Notice how there's more room in order for that to cover. This one finished, this one finished, this one finished. Guess what? Ooh. That has broken the secondary one. So the odds that the price will go to 153 is more than likely to happen somewhere sometime in the future. So from here to here, you're in an uptrend. When the price approaches around here, then you can't go long. You have to short it. Right? Cool. So fix up your homework and
yeah, but in this case, if the price goes more than higher than 154, will you change the main trend line? Will you modify it to the?
Oh, very good question. Once the price has been broken at primary, that is it.
Yeah.
You're in a new trend. In actual fact, so here, that angle actually will change. But if you're going to go to the actual highest of the peak, once this has been broken, then you are in definitely a new change of trend. In other words, from top to bottom, it will go through, I believe, 155.70 here, which is the high of this. Then you have the 50, and then here 60. So if this one gets broken, the probability to go through a retracement level around 56 is very, very high. At least another 500 pips to the upside. But if it doesn't want to, this is going to fail all the way back down, even below 145.
So do you daily modify the trend line, or how do we do if the price break out to very high? Or
and that's where you have to keep changing the trend line and modify, yes.
Okay.
Okay. So now part of your homework is to clean up what's more valid based on the current candle. That is the most important part.
Oh.
All right, make sure to attend the support classes for the beginners, because this will actually help you if you're still confused or uncertain. Make sure to attend those. They will actually help you. All right, I hope that makes it clear too. I hope that Chris and Russell also learned something from that. Thank you for coming, Caitlin, and you guys enjoy your lunch. And we'll wrap it up. Have a good one.
Okay, talk to you later.